Hi, everybody. Mihal, thank you very much for having me here today and taking a chance to listen about us. My name is Mitch Geisler. I'm the CEO of Leveljump Healthcare Corp. And we are a publicly traded company on various exchanges. We went public back in December on the TSXV as a tier 1 company. And we also under the symbol JUMP. So we just have our disclaimer up there to begin, just usual standard language. And then we can begin. So Leveljump Healthcare Company, we are a telehealth company, meaning we're providing our services remotely, healthcare services that is. And what separates us from potentially some other telehealth companies, maybe you've seen over the course of the last year, is a few things. One would be that we focus more on a B2B or doctor-to-doctor relationship. We're not about patient acquisitions. Two is that we just announced recently we have had a record quarter. We have on pace this year to do over $6.5 million right now, and think we'll be tracking closer to 10 million before any acquisitions by the fourth quarter of this year. We generate free cash flow on a monthly basis. So our balance sheet, actually, we just did a small capital raise. And that money is just sitting there ready to go towards acquisitions as we build up a very clean balance sheet. So we have an operating subsidiary called Canadian Teleradiology Services, or CTS, which supplies remote radiology reading services to hospitals. Well, what we're trying to do here at Leveljump Healthcare is build a full service company that's focused solely on diagnostic or medical imaging, and that has to do with MRIs, CTs, ultrasounds, things of this nature. So we have CTS, our current operations, as I mentioned, that generate free cash. And we also deliver our services B2B telehealth. We also have a company called Leveljump Healthcare Technologies that we recently established, which I'll get into. And it's for the purposes of acquiring what we would consider new and disruptive healthcare technologies as we move along. So why diagnostic imaging, and what's so special? Why should it be in your portfolio, and should you take a look at us? Well, if you think about healthcare, really one of the core pillars of healthcare all runs through diagnostic imaging. If you go to an emergency room, most patients there will need a CT, an MR, an ultrasound, some kind of diagnostic image. If you think about ailments that you might have when you go to the doctor, a lot of times if they can't determine what it is, they'll send you for a medical image. And then when it comes to determining and finding diseases, treating surgeries and diseases pre and post-op, a lot of times you'll have recurring diagnostic imaging. So not only is healthcare an important part of your portfolio, which I'm sure is why a lot of you are here today, but when you look at diagnostic imaging, it's really one of the crucial parts of it. And here we have a company we built that's already, growing and has a lot of positives for it. Our revenue streams include government payers. It leads to consistent flow of funds and reduced receivables. So we'll just take, again, a broad look here. We have CTS, which I'm going to get into a second. We want to take that company and expand our current emergency room service for hospitals. We also want to create a day service for private clinics. Following that, we're also looking at acquisitions. So CTS is what's driving our revenue now and creating the cash flow. When it comes to acquisitions, we're looking at what we call independent healthcare facilities or diagnostic imaging centers, like where you would go for an X-ray, maybe a CT, MRI, ultrasound, things of this nature. And we want to do a roll-up strategy because they're very profitable, and we see it as a great angle and complements our existing business and operations. We also are looking, as I mentioned, at technology. We're looking at both the hardware and software side of things, hardware being maybe being a distributor in certain regions for hardwares that we see upcoming to the market that will be disruptive, and software opportunities that we're looking into. We feel as we build out our company that we're going to have a medical imaging company that has its core business of teleradiology and these independent healthcare facilities, all gaining top line revenue and bottom line EBITDA and positive cash flow. But at the same time, we think technology obviously is a wave of the future and can provide that extra big bang for long-term shareholders as the company grows. And then we will look at healthcare investments within other healthcare companies if we think it's beneficial for shareholders. Excuse me. Okay, so let's take a look at our current operations, which is CTS. CTS, as I mentioned, is a doctor-to-doctor telehealth company. We have an over 16-year history providing radiology reading for hospitals. So what happens is these are hospitals usually in small urban centers or rural communities. They won't have enough radiologists to come live where they are because of their remote locations. And their emergency rooms after hours will, like overnight and then throughout the weekend, they don't have enough radiologists. So a patient goes there and needs a CT, but has nobody to read it. So they'll engage CTS so that we can cover this for them. So we're providing teleradiology services, which is the remote reading of these offsite CTs, ultrasounds, and what have you. So if you look at our workflow, you'll see how we have the patient comes into the hospital. From there, the ER doc physician will decide that they need a CT or ultrasound. They'll then take the image using the hospital's equipment there, and then they're able to send it, what we call a PAC system, from the hospital system to our systems, page the CTS radiologist on call, and then we'll be able to provide a report for them so they can proceed with patient care. So we're really there for hospitals when patients need us at their most crucial time. We provide 60-minute turnaround times on our stats and 30 minutes when we're doing stroke protocol centers. So what we do is very crucial to a successful healthcare system. Our business model is that we'll have multi-year contracts and automatic renewals with our hospitals, which they tend to like. So generally speaking, when you bring on a hospital, that contract can last for years and years. We just announced a contract in Q1 with a hospital network, and we see that as being, 5, 6, 7, 10 years down the road, that hospital will still be with us because our history always indicates that the hospitals like to stay on with CTS. We build the insurance plans, being in Canada, where we're predominantly serving right now in the province of Ontario. The hospital will bill OHIP for the work our doctors do. OHIP, the Ontario insurance plan, or if we were in another province, that a provincial insurance plan would pay the hospital, who in turn would pay us, and then we pay our radiologists. What's great is when you are dealing with government payer like that, we don't have to search for our accounts receivable. They come in on a timely basis every month, which is great. Our revenues are recurring and long-lasting relationships. CTS, while we provide service 7 days a week, 365, and we do have some hospitals that use us as their sole radiology solution, many hospitals will use us from like 5 o'clock to 8 a.m. on weekdays and 24 hours on weekends. What is unique about CTS is really every hour of every day, holiday or not, we're engaged by our client hospitals, and that creates revenue. So every single hour of a day, we're creating revenue. And even the hospitals that maybe they just use us overnight, they use us 7 days a week, 365. So we really create a cohesive relationship from a business standpoint. And CTS, what we do is we try to ensure that we are creating a great relationship between the technologists, emergency room doctors, and the CTS radiologists, so that the flow is great and the patients gets their reports read in a timely fashion. CTS service can be accessed from anywhere, as long as there's a solid internet connection, which makes it ideal for expansion, and certainly ideal coming out of the pandemic, as more and more hospital administrations are taking to this idea of trying to offload certain services wherever they can. So that's CTS, and that's what drives our business right now. But we are looking and working on acquisitions, as I mentioned, what we call independent healthcare facilities. And these facilities are centers that do both top line revenue and have bottom line free cash flow, because that's part of, remember, our model of what we want. So we always want to be generating cash with any acquisition that we make. We believe that the opportunity here in Canada is ripe for acquisition and roll-up strategy. We believe if we bring enough centers under one banner, purchasing these imaging centers, we'll be able to consolidate the marketplace in in an industry that doesn't really have a national player in Canada. We'll be identifying existing clinics that offer strong profitability and cash flows. As we grow, we're going to be able to identify synergies for maximum earnings, such as moving to telehealth for all the radiology reading, looking at daily operations and software systems, increased buy-side effectiveness, and other areas that will increase our profitability. And certainly we'll be looking to maximize provincial codes wherever we can. With this will come a national branding campaign that will be based on value and what's best for patients. We'll always keep true to our core principles of effective and efficient patient care. We'll think nationally and then globally, but we'll always remember locally, because it's important in the healthcare industry to remember the relationships with referring doctors and clinics that will be sending patients to you. So we kind of have a great model here of current operations and a distinct model of where we want to go, growing the teleradiology and doing acquisitions of our independent healthcare facilities. The medical diagnostic imaging is a $40 billion worldwide marketplace and is growing annually. As mentioned, teleradiology can be performed anywhere that there is a high-speed internet. While our focus at the moment is in Canada and growing that, we're going to be looking at the Caribbean, Southeast Asia, and other areas where we know that they're looking for Canadian or US board certified radiologists, and how we can play a part in that. Really, we have an opportunity here to grow and go to nations that don't have the same kind of healthcare that we do. And as I mentioned, because it's such a core pillar in diagnostic imaging, institute a plan that will help them with their emergency care needs and other needs for that matter too. So we believe we're going to be able to capitalize on the growing trend of diagnostic imaging using our current infrastructure. Corporate goals over the next few years, we plan to grow aggressively, grow the company from CTS with organic growth, new customer contracts and acquisitions, acquiring both positive cash flow and net income companies, expanding to other provinces, jurisdictions, and countries as already mentioned, establishing daytime radiology reading group, and acquisitions of our IHFs. We want to make sure we're growing our earnings per share and returning value for all shareholders. Our corporate structure currently is 50.6 million shares outstanding, of which management, we hold over 22 million shares. So it's tightly held. A lot of shares were actually bought at a premium to where the market is now. So we think that it's a key opportunity now. And as we come out of the pandemic, we're a company that will still be around and having our revenue streams, because we've been around already for so long and we've had considerable growth for the last 4 years. The board is made up of myself and our CFO, Rob Landau, who has many years experience in various industries, including healthcare, Sandra Hall and Jeff Stevens, who are also involved in public companies and sit on other boards of companies on the TSX. And we have an advisory board who specializes in healthcare and financial structuring, who's there at our leisure as needed. And that will give you the overview, and hopefully you got some good insight into Leveljump Healthcare, taking a look at why we're different than some of these other healthcare companies that you might be looking out there in the penny stock range, and we have a lot of opportunity for growth. With that, I'd love to take some questions.
Thank you, Mitchell. So the first question coming from Daniel here. So you work with the hospitals to provide the service there, and if they don't work with you, what are their other options available to them?
Okay, imagine the question is more like about competition, maybe.
Yeah.
So I would say in Ontario, the province of Ontario, where we are, we're one of the main 2 providers of teleradiology services. The other company I would suggest is probably about the same size as us. And really after that, there's kind of like local hospital networks. Well, maybe they'll help out an area, but there isn't really a lot of companies out there that take the business strategy that we do. So a hospital, you know, they usually call us, or they could call our competitor, or they'll try and find, you know, some local group for radiology services. But that's what happens is a very taxing work environment as a radiologist. So that's why we do get a lot of calls and people saying, hey, how can CTS help us?
So the next question is your business model applicable to US market?
It is very much so. There's a lot of big players in the US market already. So we found that we should be focusing on our backyard where we have an upper hand. We've built out a reputation. There are some barriers to entry in Canada that aren't in the States actually. So that kind of gives us a leg up too and prevents some companies down from the States coming into Canada, which we think positions us well. So that's why I mentioned opportunities globally, Caribbean, Southeast Asia, things like this for us to focus on where that's in demand. Certainly we would look at a US hospital if they called us. We'd be happy to quote on and see what we can do. It's just not our main focus at the moment. And in Canada, I'd say they're a little bit behind in adopting teleradiology, but now they're coming more and more online with it thanks to the pandemic and kind of changing people's perspectives.
Sure. The next one coming from Duke Sure here. Is there any financial forecast you can make in the next 12, 18 months?
Yeah, we've put out that we're hoping by the fourth quarter we'll be trailing for about 10 million with EBITDA at that point of about 750,000 to $1 million. And a lot of that EBITDA is a really net cash flow because we don't really have any debt on our books. We have a very clean balance sheet with cash just sitting waiting to be mobilized. That's without acquisitions. What we'd like to do over the next couple of years is build up the company based on targets that we've identified and hopefully get, I'd say in the next 18 months, possibly up to 20 million in revenue with about $4 million in EBITDA based on acquisitions that we're looking at.
Sure. The last question from Mark here is that how many distributors do you have in the North American market?
How many, I'm sorry?
Distributors, he says.
Maybe means client hospitals. We have a few dozen client hospitals. Yeah, it's a few dozen, so it's pretty good. Sometimes it's a single hospital that comes to us, and sometimes it'll be a network. Where it's really great is obviously any hospital we can go into, but we find a lot of remote locations where they'll have maybe a network of hospitals. They'll come to us, and again, single volume at one hospital isn't a lot, but when we aggregate it and put it all together for our radiologists, it makes sense. So we can make financial sense of it all. So all of a sudden, this hospital that would be almost orphaned, if you will, couldn't find radiology services because we're bringing them all in together and lumping it and able to provide the service. Now they get the same standard you'd get in a big urban setting. So that's why we really help to level the playing field for these communities.
Great. So thank you again, Mitchell, for your time in answering all the questions and share your story with us here.
Thank you very much. Appreciate it, Gilbert. Thank you, everybody, for your time. Shishi. Thanks.
Thank you.